before I dive in, always remember you're the portfolio manager on a hedge fund desk. Your job is to take the information I'm sharing, figure out how it fits your strategy, risk tolerance, goals, all that stuff, execute your strategy, and be the smart money. All right. Alert, alert, alert. Risk monitor green. But we've been almost max long in the flagship fund. So you know where my head's been. We got confirmation of that portfolio structure yesterday. The risk monitor's been yellow for the last few weeks, and you and I have been making a killing in this market. I mean, crushing it the last couple of weeks. With the risk monitor yellow, that was strange. So confirmation of green yesterday, and I'm sharing with you this morning, makes sense. It should be green. I think to myself, can it get even better? Is that possible? And so I remember a long time ago when I first got into the business, William O'Neill had an institutional service. There were no computers. There was no way for me to have this conversation with you online. There were computers, but there was no internet, okay, when I got into the business. And so once a month, a sales rep from William O'Neill, which is the publisher of the Investor's Business Daily and the publisher of the book, How to Make Money in Stocks. And this is kind of the cornerstone of everything I do with you. We used to get, Dad and I would get these large maroon books that were full of weekly chart patterns. So what you do with me on the live trading desk, when we flip through charts at our fingertips, right? That wasn't available online. So we had a guy literally show up at our office once a month and, bring the tablets down from the mountain and slap it on our conference room table. And we would go through charts and he would share his thoughts. He was a real great guy. His name was Bruce Hanley, God rest his soul. And Bruce used to say that the average investor is comfortable with failure and can't stand success. And if you're going to be a successful money manager, you cannot execute like that. You have to flip that equation on its head. And what he was saying was, how often, think about it yourself, how often do you have a position, it starts going down, you're losing money, and you start rationalizing it. Oh, it's a great idea. I love the company. And you're losing money. You're comfortable with failure. You start averaging down, then you lose more money. You're comfortable with that. You're so used to it because that always happens in the market, right? And you can't stand success. You get on an idea, it jumps 20%, you sell it. Why are you selling it? I don't know. There's no stop. Nothing's happened. There's no reason why you should be selling it, but you sell it. It's because you can't stand success. And so Bruce is like, don't fall victim to that. Now let's go on to look at why the risk monitor has changed. First of all, and in no particular order, one of the lagging indexes in the risk monitor was treasury bonds. Treasury bonds are exploding higher. Up 4% in 7 days. That's a huge move from treasury bonds. Rates going down. That's what that means. Breaking a year-long downtrend. The market's getting ready for Fed rate cuts. Morgan Stanley thinks they're going to cut rates 3 times before the end of the year. Okay. ARMR Investing swing strategy. The returns on this strategy, 176% in 35 months. And you guys have watched it happen. That's not a back test. That's fact. You've watched it. It's a highly accurate strategy, somewhere in the 90% range. Doesn't mean it can't fail. It can fail, right? I mean, at least 1 out of 10. And when I built it, it was dialed in for like 7 out of 10. So I built it, back tested it, started it 35 months ago, and it was running at a 7 out of 10 clip, making a lot of money. And since we put it to work, it's making money 9 out of 10 times. I don't know why. Don't fight it, right? The lead indicator of the 10 indexes that we follow for risk on has been Bitcoin over the last 12 months. Not always, but definitely since the last election. Bitcoin's been leading the risk on charge. And it was lagging. It still is lagging the market. It's a little strange to me. It's been lagging the market. Yesterday, ARMR Algo gives a buy trigger on Bitcoin. There's the entry point on Bitcoin according to the algo. Another piece falls into place. The two other leading indexes, so there's really 3 of the 10 that usually lead risk on. Wow, those other 2 are singing. Innovative growth, IBD 50, blowing out to new highs. Momentum, blowing out to new highs. And then we get the other 6 indexes all giving the same risk on look yesterday. Now we know Quad U's gave us a risk on here. So we added QLD to the macro fund. Now the equally weighted gave the risk on entry point yesterday. Equally weighted NASDAQ, bang. We know the S&P is already risk on. The equally weighted S&P gave the risk on buy trigger yesterday, bam. Small caps have been leading. They keep running. That buy trigger on small caps was back here. Geez, I mean, it really was kind of here and then right again here. These big up bars were telling you something special was going on in small caps. So small caps have been lagging for a long time, and now they're starting to lead. And then you round it out with the Dow, and you can see the Dow make an all-time new high. So when you go through all of that information, you can see the risk monitor is green. When you look at the success of our portfolio the last 3 weeks, you know the risk monitor should go green. So there it is. So the tailwind's there, and I had to share it with you this morning. Can't wait till 3:30 today in case anybody's got some adjusting to do. I hope and I suspect there's not a lot of adjusting for ARMR insiders. I hope and I suspect that, because we've been, if you got to make your own risk decision, got to make your own strategy execution. But if you're looking at the ARMR flagship fund, you've been noticing the last 3 weeks, we're like max long. We're dealing with 5 to 10% cash, which has all been put to work. And I'll go over the 3 stocks we bought yesterday. But you kind of should already be there. So if there's any little adjustments, any favorite names you've been holding in your whiteboard, and you're like, well, I don't know, let's wait for the risk monitor. Well, here it is, a risk-adjusted rate of return. It's about balance. It's about executing your strategy and being the smart money. I'll see you on the trading desk.